Let's start off there. The dollar strength, here to stay?
For the near term at least, absolutely. I thought the communication from the Fed, as you've described there, supports a stronger US dollar. Some of this news is already in the price, of course. The market had been moving to make way for a more hawkish set of communications from the FOMC. So some of this is in the price. US dollar, as you see there, has been trending up for some time. But yet, as we look at it, US dollar has still got a powerful set of fundamentals behind it. Growth momentum is good. It offers high yield, and it's clearly outperforming all the majors, and it has safe haven status too. So there's a lot of good news in the price. But having said that, the fundamental drivers are still there, and Mr. Powell has managed to out-hawk the market. So we think US dollar strength can continue in the near term, at least.
Right. What does that mean for the euro as well as the British pound, given how the ECB as well as the BOE are thinking about rates?
Yeah, look, the contrast there is quite striking, isn't it? Both in terms of growth and respective central bank action. So in Europe, the data's been completely underwhelming. PMIs below 50s. Data from Germany has been consistently quite poor. We think euro can continue to grind lower down. We had a target of 105. It's already moved down a fair way towards that, but that's clearly been the trend. When it comes to the UK and sterling, I think our feelings are even stronger. Our strategy team have been short the pound, targeting 122. We're within striking distance of that, and we think it could actually go further. On the UK side, we had surprisingly soft UK CPI data about 12 hours ago, of course. What stood out for us was the weakness in service prices in the UK, and we know that sticky service price inflation has been a real bugbear for central banks, of course. Following that data, our team in London actually moved to change their call on the Bank of England. We've got them on hold later today. So we think sterling can continue to move down as well.
Indeed. One final question, Andrew, because we are tight on the show this morning. The yen's move, ahead of the BOJ's decision, the central bank in Japan doesn't want a weaker yen because obviously it imports inflation. Inflation is a worry given that you're on an adjusted basis, on an inflation adjusted basis, it's eating into the kind of productivity gains that we're seeing in the region. So how does one look at the trajectory for the yen from here?
Yeah, look, broadly, we think 145 to 150 is the range. Our strategists in Tokyo have been favouring a sort of buy dips strategy. Really conflicting forces, those fundamental divergences are powerful and support a higher dollar yen, of course. Having said that, it's moved a long way, and the Japanese policy makers are expressing increasing discomfort. Intervention risk grows as it moves higher. I think markets do like round numbers, and markets sometimes like to test policymakers. So you couldn't rule out a move up to 150. But, if we get up near there, I think the risk of intervention grows. So all up, I think the outlook for dollar yen is probably a little bit mixed from here.